Well, hi everyone. This is unprecedented situation right now. None of us have seen anything like this happen before, and we thought we'd try something for our customers that we've never done before as well. We're all working from home for obvious reasons, and decided to take the opportunity to discuss the impact of the coronavirus and the economic downturn associated with it on the renewable industry, and thought that it would be interesting for our customers to hear that conversation. So let's get back to what we were talking about a second ago, Edurne, about the solar supply chain. What can we expect this year, and what are we seeing right now?
Well, what we are seeing is a situation that is changing like on hourly basis. We experienced a major disruption of the supply chain in the first quarter on the manufacturing side because of the expansion of the coronavirus in China. As you all know, the solar supply chain is extremely concentrated in China. I'm talking mostly about the module side. So in that sense, the disruption of the coronavirus was brutal for manufacturing in the sense of like disruption on production, logistics, and transportation of polysilicon, wafer, cells, and modules, as well as all the other components that go into a panel like junction boxes, glass. What we're seeing right now is that this manufacturing disruption is little by little going back into normal, more components, more how to say, more transportation is becoming much easier, as well as shipping from the ports that were operating like below 50% in the previous weeks. However, what we are experiencing at the moment is that this ramping up of the manufacturing in China is actually happening at the same time that we are starting to see disruption on the demand side in international markets. So that's a little bit the situation on the module supply chain side and on the solar side
Okay.
at the moment.
Well, what about wind, Edward? Have you seen anything on that?
Yeah, we are seeing something similar, but I think that the pace and how this shock or this disruption is happening is very different from the solar sector, right? Edurne said that the solar manufacturing is basically concentrated in China. For the wind industry, it's slightly different. The story is slightly different, where we see we have manufacturing hubs in different regions. We have manufacturing hubs in China for sure. We have in India. We have in Europe. We have in North America and in Latin America. So what happened is that when the coronavirus crisis started in China, and we had all these disruptions related to the situation in the Chinese market, we saw clearly a slowdown of the manufacturing capacity in China. But it was mainly impacting the Chinese market or the supply of equipment for wind projects to be developed in China. Why? Because even if some Western manufacturers, they have manufacturing presence in China, they have been able to more or less increase or boost their manufacturing capacity in places like India or in other regions to compensate for the lack of production in China. But that was when the situation was just impacting China. But nowadays, the situation has become much more global. So the impact that we saw in China is starting to happen to be visualized in Europe as well. We have seen recent announcements of some tier one suppliers to the industry announcing the closure of factories. And the problem is not that much related to the supply chain itself. It's the fact that logistics are being impacted. Edurne referred to that. People like us, we are working from home. Some people are just the production has to stop because people have to be isolated and there is a lockdown. So clearly this has an impact. And when it's not the main component that is impacted is tier three suppliers that are impacted, that impact tier two suppliers, tier one suppliers to the industry. So now we are seeing it's spreading. It's becoming more of a global issue. And what the wind industry is experiencing is something very similar to what Edurne was mentioning, is that now the shock has been transferred to the demand side. I think that we can discuss that later on. But this is having an impact because now we are seeing a slowdown of projects just because the permitting process itself it's suffering. So yeah, public servants are
So,
working from home.
yeah, exactly. But how big is the disruption to demand? Like, how can we measure that? How can we think about the scale of the demand disruption here?
May I go back to something that Edward just said, about in the case of the wind industry, there is a significant manufacturing outside of China, while in the case of the solar, it's not as significant, especially on the module supply chain for inverters. It is a different scenario. So actually, right now, for the wind, the situation of the spread of the coronavirus is also impacting demand and also manufacturing outside of China. But in the case of China, in the case of solar, it's very different because due to the concentration of manufacturing in China, right now we are seeing a situation where the manufacturing is ramping up and is not being impacted, but it's only demand that is being impacted. So I think that's going to be a significant difference between wind and solar.
So in the
space of surplus on the solar side might be bigger because of the concentration in China and the fact that China passed first this coronavirus, or is passing first this coronavirus wave.
So are you saying that, and leaving aside the disruption to demand, I'm sure we're going to talk about this more, but what are you saying that we are going to have a glut in modules in 2021 with big price drops because there's going to be lots of Chinese modules available, but nobody to install them?
I think at this moment, we are in the middle of the publication of our new forecast, but there is enough indications that if manufacturing continues to the current ramping up, we will, and demand continues with the current pace of declaring force majeure or total disruption of the installation, we will be seeing a situation where we might face a major surplus of modules. Yes.
I mean, it's a strange situation because we've never seen anything quite like this. We've always had this like elasticity in renewables markets. When there's an oversupply, prices fall and demand is reignited somewhere in the world as a result to correct the balance. But it almost feels like that you couldn't sell a solar panel today at any price. So I guess the big question in my mind is how long is that situation going to exist for? And how long can the suppliers ride it out?
Yeah, exactly. I mean, do we have any indication of to what extent companies will be able to supply to survive this? I know that margins are extremely thin in manufacturing. So, will there be will this be accelerating the consolidation in the industry that we're already seeing?
Well, before coronavirus explosion, we were already working on the assumption of an increasing concentration and consolidation on the supply chain. So this is a process and phenomena that was happening already before coronavirus. Now, this situation where it's going to be an accelerator of such concentration and consolidation. So yes, we will be seeing a bigger, also because it's very difficult to anticipate how long the situation could last. And at the end of the day, there is also the question of what will happen with China, and if installations in China pick up in the second half and could actually sort of mitigate the shortage or the slowdown of demand in international markets.
I think, but to me, I think that there is an interesting point here, and that is more related to demand, is that we are assuming, a lot of the industry is assuming that there might be a return to business as usual, right, after the crisis or the episode of the coronavirus. So I think that what is going to be very interesting is to understand how fast this business as usual is going to be recovered. And I think that that's the key question here, right? And personally, I don't have an answer. I don't know how to answer that because it's complicated.
I don't think we'll ever see business as usual as it was 3 months ago.
I agree. That's the point. And then when you think about the policymakers, right, in terms of who's going to launch an auction nowadays, who's going to launch an auction?
Well, the actual value of the asset is going to be different in 6 months.
Well, that reminds me of something that I wanted to say a second ago, which was, I think very clearly when I started as an analyst at this company, it was January the 4th, 2009. Right at the sort of middle of the global economic crisis. And then I remember in 2010, the renewable industry grew off the scale. I can't remember the percentages now, but it was huge. Now, but it doesn't feel to me like we're going to get that reaction in 2021 when this is sort of run its course and played out, because everything's quite different. We're talking about merchant markets instead of feed-in tariffs. We're talking about, very, people installing solar on their roofs to save on energy costs rather than to earn from feed-in tariffs. So yeah, what happens when this is all blown over? Given that, like, what's the situation for merchant renewables, for example, right now and later in the year?
Well, I would say right now, if ever there was a window of opportunity for merchant projects in Europe, that's clearly closing very fast. I mean, we have a double whammy effect of falling demand. I think in Italy, in the first week after the confinement, the electricity demand fell by over 13% and it's continuing to fall. That clearly has a big downward effect on electricity price. And we also have the effect of commodity pricing, especially gas pricing, falling. So wholesale markets will not sustain new renewable projects, not now and in the foreseeable future. It's maybe a different question. If you project yourself a little bit further out, where demand is going to come from, I think it comes back into policy and to the commitment that policymakers will have towards the sector.
Yeah, I think that one thing is that when we think about renewables nowadays, and I think that you mentioned that, Sam, I think that that's an important point, is that in the past we used to have feed-in tariffs. Right now, renewables, they have basically three main ways to get revenues. One is auctions tenders or public support or public PPAs. The second one is going merchant, and the third one is basically corporate PPAs, right? And the problem I see personally is that none of these three is in very good shape. Is that I think, Francesco, you alluded to the wholesale prices. Wholesale prices are going to go down. Demand is very weak, and then the commodity prices are very low, and there is a surplus of gas that is going to flood. For example, in Europe, we see that. So wholesale prices, in our view, are going to go down. So that's not an option. Auctions might not be a priority for the governments because they have other fishes to fry, right? More important things, and other sectors like the automotive.
Yeah, out of the three, I think that's probably the one that could be. I mean, I agree with you. That might not be the absolute priority after the coronavirus crisis passes. But from the three options, probably is the only one due to the commitments that we had on the table at the international and national levels.
Yeah, and then we have the corporate PPAs, and the corporate PPAs, well, I suppose that companies will have to be flexible, right? They are facing quite unknown times. They don't know. So it basically, it's going to take time for them to adjust.
And there's another aspect. I was discussing this yesterday with an investor. One of the main concerns with corporate PPA is going to be the off-taker credibility, because a lot of companies are going to come out of this in really bad shape. And so the bankability of the off-taker is going to be a big issue. So it might be an opportunity for aggregators to step in and take that risk, but it's going to make structuring PPAs very complex.
Yes.
And just one of the things to follow on your point, Francesco, is in terms of policy, I think one of the big things that we'll consider is the what if, in terms of if there's a big reduction in demand in Q2 and into Q3, if this extends and beyond into 2021, will be what's China going to do? And Edurne mentioned this, where we might have the situation of vast oversupply because of this ramping up announcements. Will they continue as planned, as normal, or as indicated to the market? Module prices may fall pretty rapidly. And then what will some national governments, and one of the biggest being, especially in the solar market, maybe less so on wind, will be how will China, and will China return to being, instead of, its share of the market, especially with respect to solar, has been falling below 50% in the last year. Will this now return to the kind of normal, where they'll be above their kind of 40 gigawatt mandate, or pushing up towards 50 gigawatt or more? Will they step in, and will they step in rapidly, as in the next month, 2 months, to either prop up their own industry or to help bring on demand domestically? I don't know, Edurne, if you have any thoughts on that.
I mean, yes, that's the big question. When the crisis hit European demand for for renewables, and that was a time where renewables were heavily subsidized. The country that picked up that start leading demand was China, and China was able to absorb a big part of the production of the solar production at that time. I think that one of the biggest difference with that time is that the solar industry in 2010, 2011, I mean, we were talking about global markets or global demand below 50 gigawatts or like 40 gigawatts in those years. Now we are talking about a country that has a manufacturing capacity only on the module side that is above 130 gigawatts. So there is the big question of how much of this, first, if there's going to be the willingness and the capacity of the Chinese government to pick up and stimulate demand short term. We have a batch of projects and decisions that need to be taken in April. And then there is another batch of projects where decision needs to be taken around June. So let's see, as Cormac was saying, how fast the Chinese government reacts and whether or not there is this willingness and capacity to do so. And while we see the international demand, slowing down in all regions because of the consequences of coronavirus, how much of that demand China is actually able to absorb.
And I think that there is a very good point here, but I think that the situation is completely different as well from 2009, 2010. And just a back of the envelope calculation, you were talking about 40 gigawatts, Edurne versus
I don't remember by heart, but I remember.
Yeah. The order of magnitude, right? And now 130. But if you look at the what was the value, the investment at the time per megawatt installed, and you look at what is the value per megawatt installed now, you would realize that the size of the industry might be very similar.
Yes.
Very similar. It's just the volume is bigger, but in terms of money, we are talking about even a smaller industry potentially. So that means that in terms of a strategic decision from a government, we will see how China reacts, because what's going to be China's interest? Maybe it's just about accelerating that energy transition, but not from the manufacturing side, but more from the generation mix side, right? So taking advantage of a cheap technology that can enable them to accelerate their energy transition. So I think that that's an interesting thing to watch at. Is that okay? What is the, because I think that Sam, you were telling me this number that I wasn't aware. You said 32 billion, right? That's the size of the panel industry in 2019.
Yeah.
Well, I think that with the 40 gigawatts that you were mentioning in 2009, maybe the market was twice the size in terms of.
I actually think the industry was a lot smaller than that in 2009. I have much smaller numbers in my head.
I was talking about 20. Actually, the European market that did not collapse in 2009. It was a bit later. But
2010 was like the year that we had like Germany, Italy, and the Czech Republic were like 80% of the global industry in terms of demand. And I think we were talking in the order of like 20 gigawatts, something like that. So, but I totally agree with you that prices have come down dramatically. So with the general size of the industry in dollar terms has pretty much stayed.
But if you think about this, the strategic aspect, and if governments are going to prioritize renewables over other sectors when the time comes to pay out, the big stimuli packages. The question is, what are the attributes that renewables can bring to the table? They're green, okay. Is it going to be a priority? Maybe not. They're cheap, yes. But they also offer other advantages. Energy independence, I think, is one of them. Then they're not really correlated to fluctuations of commodity cycles like oil, etc., etc. So countries might find this an attractive proposition, and maybe this is wishful thinking, but in the long term, that might provide a shift towards these technologies.
And I think that there is a very important aspect, Francesco, that if I may add, that is a subtle thing, but it's as well, they are logistics free in the sense that once you have an asset that is installed, you're not dependent on if a port is available, if a logistic is available, if
and
you can.
The OPEX, I mean, the OPEX of a renewable plant, especially on the solar side, are ridiculous compared to.
And I think that makes them attractive not only for governments but also for investors who are looking in these times for an asset class that has a protected revenue stream and a protected, cost or operations. And that clearly an existing renewable plant with a PPA is exactly that.
Yeah,
they're not correlated with the rest of the economy, and they offer stable cash flows when everything else goes to.
Yeah,
just linked to that, Francesco. One of the outcomes certainly of the COVID-19, when we fast forward 6 months, a year, will be what will be the obviously the health of economies, and certainly one key pillar of that will be financing, and so financing of renewable assets. And I think it's safe to say it may get harder in some ways, but then there is obviously the flip side. Edurne and Eduard, we've been talking about this in terms of ESG and the money that is being allocated to these, and that there's quite a lot of pent up investor appetite for very focused investment in wind and in solar, and there's a lot of M&A activity. So that for me is one of the interesting dynamics where we'll have a world where maybe in some ways it'll be harder to get financing, but then there's obviously there's like this wave of kind of demand in some other ways from an ESG perspective or the corporate world. I don't know, Eduard, if I know you've done something else.
Let's put things in perspective. I mean, Davos was 2 months ago, less than 2 months ago, and it looks like it was 5 years ago, but I mean, the key takeaways after Davos and in the subsequent weeks were basically total priority from governments, corporations, international institutions to promote, to accelerate the energy transition and the growth of renewables, etc. So it is true that at this moment we are all submerged by this, what is happening short term, and we all know that this is going to have consequences on the economic side that might impact the implementation of some of the measures on the ESG side that were thought. But I think if we look into the longer picture, I have to agree with Francesco that there are the fundamentals for renewables growth are still there. In terms of cost evolution, in terms of independence, in terms of lower OPEX than conventional sources. So in terms that we still have not sorted out the issue with lower emissions as a community. So if we try to look beyond what is happening at this very moment, that I'm not minimizing the gravity of the situation, but I think there are good reasons to continue being positive about long-term implementation of renewables.
No, and I think that there is a point here as well, that I think that you talk about the short term and who knows, but this crisis might be a very good excuse to make radical decisions, right?
Yes.
So you were talking about the transformation, the public opinion, and all of us, we are more ready to take or to accept big changes in the way how things work and how things are going to be structured. So that can play positively for renewables, right? It can be the good excuse to what you just said, right? When you think about the external shocks that all the economies are facing, driven by this coronavirus shock or crisis, a lot of the countries are starting to think about or putting more upfront things like security of supply, but not security of supply in terms of nationalistic, but it's more about how can I make sure that my factory is going to be able to work, or how I can make sure that my assets are going to be resilient, right, to this kind of external shocks. And renewables, they, as you said, both of you said, I think that they have these attributes that make them quite interesting to provide this kind of security of supply. And it's not just about, okay, I am too reliant on an external market for a commodity. It's more about, okay, in case of these kind of things that have nothing to do with geopolitics, it's more something that is not unexpected and it was difficult to control and to assess. How can I make my my business? How can I make my country resilient or my economy resilient? And renewables, I think, can play a key role in that.
And there is also another factor that we did not discuss, and I think is key here, which is priority of dispatch. So in that sense, renewables in many countries, including China, they have priority for dispatch. So that could also be an important factor on long-term or mid-term developments.
Yeah. I'm kind of conscious that we've all got another meeting to go to, and we should probably wrap this up. I could talk about it all day. It feels like we do at the moment anyway. But just summarize a couple of things. There's this dramatic shift from being an oversupplied market to an undersupplied market in like the matter of a few days, which we've never seen before. And it just seems to me it's all about uncertainty. Now, there's a few things that we're clear on: the benefits of renewables, some future for renewables, although it's difficult to determine exactly what that is at this minute. But the big sort of things that are going to impact this is how long the demand disruption continues for. All of us are in this lockdown situation, and how long are we going to be working from home with very limited ability to do anything else? And how long are we going to see demand stalled for everything, not just renewables? And then the other sort of massive uncertainty is what the sort of global stimulus packages look like, and how renewables feature in them. Because ultimately we almost feel like we're going back to this point where policy is going to be essential to continue driving renewables. But that's the kind of the only similarity between I think the next couple of years and 2009, 2010. But other than that, it feels like the world's a very different place. Anyway, anyone got anything to add or any other points before we all say goodbye?
No. Well, we could, as you said, we could spend the whole day talking about that.
Well, take care of yourselves, guys, and I'll speak to you all later on.
Stay safe.
Bye.
Bye.